Welcome to another episode of The Financially Free Investor, where you will learn information and strategies on how to become financially independent by investing in real estate, something that is not taught openly in our society today. Financial freedom matters so you can live a bigger life, retire early, and do what matters most to you. Get ready to hear tried and true methods to becoming financially free with your host, Jordy Clark.
All right, everyone, welcome into another episode of The Financially Free Investor. Today, we're going to have an awesome conversation with my friend Emma Powell. I met Emma, it was probably at a local real estate investor association meetup. And then since then, we've kind of just bumped into each other, seen each other doing cool things. And I thought it'd be awesome to have you on as a guest. So welcome, Emma.
Thanks for having me on. I love the premise of this show because that is the project that I've been working on this year. So I would love to kind of share my journey and then also network with people who are also working on it, because it's definitely a different avenue for me, and I've had to shift gears a little bit.
Yeah, absolutely. So, I mean, I'll give the folks a little teaser, but you've kind of come from just normal backgrounds and now you're doing big multifamily deals, I think kind of in great markets, right? So maybe let's go back to when you first got started and maybe tell us, how did you get started on your journey to financial freedom?
I feel like I spent a lot of years spinning my wheels. Looking back on it, we were making progress, but we weren't really having a vision, a plan. We were just trying to do the best that we could. And so we wasted a lot of years that we could have been really working on actively building this up. And I think when we really turned the corner is when our minds were finally open to these things exist, like commercial real estate for normal people is something that I could pursue. And when I finally started running around with the right people who were doing that and helping me believe that I could do that as well, is where we were able to look back on our previous 20 years of just making money on buying houses correctly, our personal homes correctly, and how we were able to make money off of those. And so that when we finally were ready to turn that corner, we could say, hey, we've got a little bit of cash sitting under us with home equity, by being just smart personal home investors. So I sometimes regret all of those years that we spent just being the stay-at-home mom photographer and W-2 and just trying to make ends meet and just always trying to get ahead and felt like we were doing a good job, but never really understanding exactly what we were missing to really rocket ahead to that level of wealth. And I don't want to talk about it in terms of money. For me, wealth means freedom. And so we just would buy houses in new neighborhoods, and we would watch them appreciate quickly, and we'd put up with all the construction and the nails and the tires and the lunch garbage floating around and empty lots and things like that. And so we just kind of figured that out on accident early, that if you buy a brand new house, it will usually appreciate more quickly because it's forced value. So we did that twice. The second one we didn't make much because it was 2008, and so we're just lucky we weren't upside down and didn't lose the home. We were also in Austin, Texas at the time, which is a great market to be in. It wasn't really affected by 2008 some of the way that the other markets were, and we were just lucky to be there because we're in the tech industry. And I've noticed a lot of IT guys and people in tech tend to gravitate to these cities that are going to weather recessions better, and so that was one of the ways that we got out of that. Again, we didn't do it on purpose, but we were pursuing a tech income because we knew that was more resilient. It was more marketable. I mean, we've always really thought about what skills do we have that we can market. So that really saved us in 2008. And then after that, we had been saving a ton of money. He had a part-time job. I was working part-time self-employed, and we were just piling up cash because we knew that 2008, like, we better be ready for a layoff. We better be ready to be upside down on this house. And so we were just piling up as much cash as we could. And then after everything settled out and we didn't lose our job, we decided to take that money and go invest in a live-in fixer-upper. And I think that's really where we got the cash that we needed to make a big leap when he finally did get laid off in 2017. And we moved to Salt Lake City. We sold that house, and we had added almost more than doubled the value of the house by remodeling it and then living in it for a couple of years in a great area that was appreciating quickly. So by buying those houses right, we were able to build enough experience and confidence and a little pile of cash that when we moved to Salt Lake and I had to completely redesign my life, like, it was so fast. It was such a sudden layoff and move within just a couple of weeks. I got to Salt Lake and I just was lost. And so I just started attending a lot of meetings, a lot of business networking meetings, just trying to figure out, do I want to start a new business? What do I want to do? And that's probably about the time that I met you. I think you were at one of the very first real estate clubs that I went to, and somebody was talking about multifamily syndication. I'd been to one before that was talking about new development, developing new homes and subdivisions. And so it was, to me, a huge eye-opening event that I could go out there and not just get a couple of single family rentals, that there was real middle class people just like me doing these massive commercial projects. And I think just those, in the first couple of months of coming to these meetings, had a major mindset shift and really just said, you know what, I'm just going to go full bore into this real estate thing. I have enough capital that I can start on my own without having to have another source of income. My husband's W-2 was keeping the lights on. And so I just dug right into it, just started looking at really big deals that were way too big for me and learning with each failure. So until I finally got to the point where I looked at one and it worked.
And that was in 2017,
Mm-hmm.
right? So, I mean, here's the important thing I want people to realize is, like, you guys, by owning your own house, you were investing in real estate.
Yeah.
Right? It's like, it's the best way to invest or start investing, because when you guys sold your house in Austin, the tax code at the time, and it's still this way today, hopefully it doesn't change, knock on wood, but
yeah,
you guys probably took $500,000 tax-free, right? Or up to $500,000 if you didn't make that.
mm-hmm.
And like, I get that there's a lot of people out there that they're like, hey, I'm going to buy this first house and I'm going to turn it into a rental. And that's great if you want to go that way. But like, to be able to take that much money tax-free, like, if you think about it, you really would have to make $800,000 taxable income to be able to net 500 if you didn't spend it, right?
Yep.
So to be able to like take that, it's a huge windfall. And really it's where most people start looking at, hey, I'm going to invest in something other than my own home. So tell us about the first deal that you guys bought in Salt Lake. And I remember, gosh, I can't remember who spoke at that meeting, but it was a Sloria meeting. And I remember, like, at the time I was just doing like little single family deals and very similar point. And I was just like, no, commercial is way too big. Like, I don't want apartments. I just need to focus on buying one more house. And, I was kind of stuck there for a few years, and it is what it is. Again, like we were talking about this before, it's just a progression, right? Like, you kind of have to get comfortable. You get a few properties under your belt and you realize, like, oh, no one's calling me at 2 a.m. with a toilet problem.
Yeah.
And so, like, the natural progression is kind of like you get a few under your belt and you kind of figure out which way you want to go. And you found multifamily. So tell us about that first deal in 2017 or 18 that you felt was too big for you at the time.
So we moved to Salt Lake City in February of 2018. So we got laid off Thanksgiving of 2017. It was the best Christmas ever. So just all that stress of finding a new job and moving. So we showed up at Salt Lake at the end of January, first couple of days of February. And I spent a couple of weeks just being kind of angry because it was cold and I just didn't really want to be here. And my dad actually grew up here and didn't really like it. He was a software developer back in the 1970s. And at that time, Utah was basically all agriculture. So he moved to Phoenix and Seattle, and that's where I was raised. And so getting back here, I always felt like this is going to sound terrible, the way that he talked about it. I always looked at, if you ended up in Utah, that was like taking a step backwards, because he went out and did tech. But by the time we got here in 2017, Salt Lake is a tech explosion, especially South Salt Lake County and Utah County. Utah County is the fastest growing county in the country. I think it was almost 150% growth. Those are the kinds of markets that people should be looking at. And instead, I was letting my limited mindset of my dad feeling like, oh, it's just, agriculture, Hicktown, when he was raised here in the 50s and 60s. And so it was an immediate mental turnaround for me to be driving up I-15 and seeing all of the tech booms, all of the multifamily building, and just really saying, like, wow, this is just like Austin. This is a place where we could really build some real estate. And we missed out on a lot of those opportunities while we were living in Austin. And so I just really immediately started thinking big. Like, the first Utah RIA that I went to, development. The second one was the Salt Lake RIA, where Matt Sneed was talking about multifamily syndication. And the third one I went to was Utah Valley RIA, where Ben Lakey was talking about development again. And so those first 3 months were a huge eye opener for me. And just going up to them afterwards and taking them out to lunch, and not just to pick their brain, but I would bring projects to them. And the project sucked. I was just doing my best, right? But it gave us something to talk about. The first project that I brought to Ben, he just kind of laughed. He's like, this is no good. But he recognized something that, and right now we're working on a project together. So these are the people that I eventually ended up partnering with, the people who inspired me originally. So don't be afraid to reach out to people, but don't waste their time saying, will you be my mentor? Or can I pick your brain? Or can I take you to a coffee? I remember one time a guy said, do not ask me for coffee in a speech that he gave. And I went up to him and I said, hey, can I take you out for a coffee? And he just gave me this really irritated look. And then he started laughing. And he said, you know what, just because you said that and you made it funny, I'll let you take me out for coffee. And we went out and we had a nice talk and we looked at an actual project that I was looking at investing in. And so that's how you get something done in this business, is you need to start making your Rolodex of people that you can call when you find something that is too big for you, you don't know how to handle, or you're in the middle of something and it runs into a problem, because it will. Who are you going to call? And so having a list of people that you know are experienced in this and who want to teach you and want to work with you rather than just act like they are better than you are and you should worship them in their higher real estate status. You're looking for people who are teachers at heart. So that's what I started doing. The first deal that I did was I did a couple of residential deals that fell in my lap. A family member who was in default on a loan. I called some people. I didn't know how to even buy an investment house at that point. I called some people that I had taken a class from on doing lease options, and they basically did that deal for me. They filled out the paperwork. They helped me find an attorney. They gave me some ideas of ways that we could take it down and negotiations that we could have with this family on how we could have win-win solutions. And that was the first one. And I was totally handheld from this teacher that I took this course from. The second couple were from wholesalers. There was like a single, duplex, triplex, just people I'd met in the RIA, and they were sending me stuff. And I thought, I'm going to lease option a few houses. I'm going to flip a few houses so I can get some more cash, because I wanted to be able to go and participate in commercial real estate, but I didn't quite have enough cash on my own for a down payment. And in the course of this, instead of flipping these houses, I ended up keeping them as rentals because they made great rentals. And so instead of making more cash, I was actually dwindling in cash. And so I told my husband, I have to stop buying these little residentials when the goal is commercial. We're actually getting less money to be able to go and do that. And he had been to enough of the meetings with me and met enough of the people that he said, you really are supposed to be doing these deals with other people's money. These are big deals and you're never going to be able to scale the way you want if we happen to use our own cash. And so he gave me a challenge. He said, I want you to go in and do a deal, commercial deal with zero of your own money. It doesn't have to be the next deal, but that should be a goal for you to get into it with zero money. And everybody always talks about how you need skin in the game, which is true. You will always do better if you have some cash in a deal. Or at least your partners have cash in a deal when you're raising capital or getting a loan. You definitely need to have skin in the game, but it doesn't always have to be your individual skin. So I was just looking around at commercial deals, working with brokers, just doing my best to learn how to evaluate them, forcing myself to do the spreadsheets. It was a process. I don't love that part of it, but making myself do it and making myself evaluate deals. If you're doing residential, do a deal a day. If you're doing commercial, evaluate at least a deal a week is where in it, and you should be making offers. If you're doing residential, you should be making 1 to 2 offers a week at least. And if you're doing commercial, I would say if you're looking at a deal a week, you should probably be trying to offer on 1 deal a month, depending on the size of the deal you're looking at. Commercial is anything 5 units and above, and I was looking like 50 to 100. And so we weren't making as many offers as 1 a month, but I was just trying to make consistent offers. And the first one I found actually came through Facebook. It was another member of Utah RIA, and she had come to present as a realtor and talking about how being a realtor could hurt or help your investing career. And she had a 50-unit apartment building in Idaho near my husband's hometown. And she just put it on Facebook. I was just scrolling by Facebook, and there was the little card that said, hey, I have a 50-unit apartment in this place in Idaho. Would love to talk to somebody who wants to look into it. And so, of course, I reached out, and a bunch of people had left comments, PM me, send me the info. So I felt like, oh, wow. Immediately, all these people who are more experienced than I who want to get this information, and I'm just going to be one little voice in a huge string of yes, 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 I'd like to look at it. But in the end, I was the only person who made an offer on it, because everybody else was just tire kicking. Everybody else was dabbling. Everybody else kind of messed around with it, thought about an offer, maybe made a verbal offer, but I was the only one who really followed through with evaluating the thing and feeling like this is a good deal, calling those short lists of partners who had said they would want to do a deal like this and help me raise money, help me run it, and actually putting something pen to paper and making a formal offer. So that was the first one that we bought. And I think I found that in May of 2019. It took us forever to close. We didn't close on it until February of 2020. They're very patient sellers. We really pushed them to the limits of what they were willing to do to work with us. But it was off market. So I felt like I had a little bit of that cushion to be able to figure things out while we were buying it. So that was the first one. And we did it as a 506C syndication. And the reason we did that is because we wanted to get a lot of marketing credibility out of that, to be able to advertise, talk about it, share it, which we cannot do with a private, a private placement that can't be advertised. So that's why we went that direction, even with such a small property. It was our attorney said it was the smallest raise they'd ever seen on a 506C. And it's just like, why are you doing it like this? Like, marketing, man. We tried to do it as a joint venture and just couldn't get quite enough money raised. And so we switched over to a syndication kind of halfway through. So that's how I went from, I felt like 0 to 60, because my first commercial deal was also a 506C syndication. And that's why it took so long to close, is we were just figuring out as we went along.
Yeah. So first real multifamily you do, like maybe other than a small residential, which is duplex, triplex, fourplex, is a 50 unit. That's pretty big. Most people would be like, hey, wow, I could never do that. Right. But good for you guys for making an offer. Because I see the same thing in Facebook land, or everyone wants, to throw their email out there and get a deal. Very few people actually follow through and make an offer or analyze it or say, hey, look, that price doesn't work, but this price would, right? Or, anything like that. So good for you guys for doing it. And then, I'm sure you guys learned a lot, and we could probably dive in a ton there, but I don't want to get too far into the weeds on all of the Securities and Exchange Commission rules, regulations, 506B versus 506C. But tell me about, if you can, how many investors that you guys had to find to help fund that deal for you. And then maybe let's, just go high level on the next few deals that you've done, and maybe the top 3 lessons you've learned.
Yeah, I had a lot of people tell me that this 50 unit was way out of my capacity. It was an old building that needed a lot of construction. The raise was just under $1 million. And so I think we had, I want to say like 15 investors on that. And most of them were just putting in like 50,000. A couple people put in 100,000. And we found most of them there were 3 partners, one who was me, who found the deal, one who was going to run the deal, was better at financial management than I was. And then we had a third that we brought in who was going to sign on the loan, because our net worth was not high enough to sign on that loan. And he ended up being a full-fledged partner. We ended up giving him a lot more equity than we'd originally discussed, because he was raising money, he was in the meetings, he was really being a true partner rather than just somebody signing on the loan. And so they raised most of the money. I think I brought in like 150, and I found all of that just on LinkedIn, because it was a 506C. I could talk about it publicly. So I put it on LinkedIn and said, hey, we're looking for investors for this project. And because we were so public about it, we did get a lot of questioning and a lot of criticism that this building, this area, you're in way over your head on this. But I think the difference is I could I'm really good at drawing on related experience and then applying it to new situations, and believing that I can do that is part of that ability. So for example, I have a degree in entrepreneurial management, which means I have a degree in how to raise money, how to do venture funds, how to do management when you have to wear all the hats, because there are just a few people running the whole thing. You have to have multiple roles. I had run a couple of small businesses before, just little cottage stay-at-home mom businesses. But between that degree and the internships that I did with some large tech startups, working in some pretty high-end spaces with scientific computing and data science and things like that, I spent a lot of time with other entrepreneurs. Our neighbor around the corner was a self-storage developer, and we talked to him a ton about that. We never actually took any action on it, but watching him do it, and kind of imagining, and I even looked at some projects, kind of imagining, like, if I was going to run this, how would I do it? So being able to say, here's what I do for my previous career or my previous business skill set, and how can I apply that to this new venture? So I'm a marketer, I'm a photographer, a graphic designer, so I make killer pitch decks. And so I went and I took care of all of that for our group, and I created all the graphics we needed for social media, for the webinar, Really spent hours and hours and hours researching and creating this beautiful pitch deck. So that was where I could contribute. And that was why I felt the confidence to be able to go out and do a project that should have been too large for me, really, and where I easily could have had a failure of confidence. I don't feel like I was overconfident, because that's also dangerous. Being able to take a realistic look of what you can do, what you can accomplish, and then bringing in your weaknesses with other partners.
A lot of really good advice in that. Fast forward, you get your first deal under your belt. Obviously, as a general partner, you're running the show, you're, managing the rehab, you're getting your investor portal all set up, and just doing all of the things that you need to do to properly run a multifamily deal. I'm sure that took a little bit of time, but then you guys probably got right back in the saddle and found another deal. How big was that deal?
Another criticized deal, because it was 2-building portfolio for 34 units in Little Rock, Arkansas. And I got a lot of, well, you already have a 50-unit building in a single property. Why would you do 34 units? Why would you do less? You're trying to scale, you're trying to go bigger. And at this point, I wasn't trying to scale and go bigger. I was just trying to do deals. I was just trying to get more commercial deals under my belt, because if you have to scale every single time that you do a deal, you're going to find yourself turning down opportunities that might be great opportunities, because I don't know if it's pride or ego, or just this laser focused vision that makes everything outside of that niche something that you shouldn't spend time on or shouldn't waste time on. I found these 2 deals from a wholesaler in a Facebook group. I was actually looking in North Carolina, and Raleigh was one of the markets that I had identified. And so this Raleigh broker just happened to have these properties in Little Rock. And I had never looked into Little Rock before. So I did a lot of due diligence on the market and on the area. And again, since it was a joint venture, I could share it publicly. So I just put it out there on LinkedIn again. I'm looking for some partners for this 34-unit portfolio in Little Rock, Arkansas, $200,000 minimum or something like that. And the people who reached out to me were the people who were very, very serious about it. LinkedIn is where you raise money from serious business partners. I would say joint venture partners probably more than limited partners, just in my experience. But they reached out, and I knew that they had at least that much money, or they wouldn't have reached out to me otherwise. So we partnered with a couple of people who could put some cash into it, and also brought in another group that they didn't put as much cash into it, but they were willing to do most of the work. And he had a financial management background, had written a book on how to underwrite multifamily apartments. It was their first commercial deal, but they really had the drive and the experience. So I like to work with people maybe a little younger than me, maybe a little more single than me, maybe a little less kids than me, because they really enjoy just putting in that work and that effort, where I'm already in my 40s. And even though I'm just starting, I'm already like, how can I get passive income, and how can I work less, so that wealth to me can be that time freedom that I'm seeking. So we brought them in to that 34-unit deal, and it ended up, we executed the business plan well, but when we ended up putting it on the market, it didn't go for what the comp said it should go for. And that was a real surprise. That lesson I learned was, it will sell for what people will pay for it. It doesn't matter what the comps say. And our broker, one of our partners, was a commercial appraiser. Like, we had great comps, and for whatever reason, we just weren't getting offers at that level. So we ended up just doing barely over break even on that project, which is unfortunate. I did well on it because I hardly had any money into it. So the money that I made was pretty good, but most of us just kind of broke even on that one. But the experience of doing it and doing this as a joint venture that I could publicly share was invaluable, because that allowed me to go into much larger projects later on.
Cool. Yeah, let's jump in. What's the one thing you'd want to tell someone who's working toward financial freedom? And, obviously we're always all working towards a higher level of more passive income and more lifestyle freedom, more time freedom, all of those things. Tell us a little bit, what's one thing you'd tell someone working towards that?
You have to keep that goal front and center constantly, because the noise and the distractions, this contradicts what I just said, that if you should be laser focused on something, then you're going to miss opportunities that are outside of that laser focus. But at the same time, I'm talking about that with projects that you're going to work on and the people you might be willing to work with. I'm not talking about that with your goals. You really have to be laser focused on your goals, because I definitely got off track with that when I was scaling too fast and I was doing bigger and bigger deals. And I remember the last large deal that I was going to do as a lead sponsor. And I kept thinking, like, I don't want to do this deal. It was a good deal. I'd made commitments to some partners and we were moving down this track, but I kept thinking to myself, like, this is a 5 to 7 year ball and chain that I got to asset manage. And that kind of language should have been a red flag to me. I should have said, you know what? I'm happy to do this deal in a more minor role. I don't want to be in charge of this or that. I will help out more as a consultant. I will sign on the loan. Like, I should have been more of the key partner than a lead sponsor, because I knew that we were closing in on financial freedom and they were closing in on my husband's ability to quit his W-2 job. And he said something to me one time I will never forget, when I was asking him, when are you going to feel comfortable? When are you going to feel ready to quit your W-2? And not that he could just sit on a beach for the rest of his life, but do something more part-time, his own business, that kind of thing. And he said, when you're ready to really cut back on your business, because I'm not just going to trade my job out for your job. Because at the time I was working pretty much full time on this business and traveling a lot for conferences and things. He said, what's the point of me quitting? Because we're not going to be able to do any of the things we want to do or have that time freedom if you're working as much as you're working. And I realized at that point that deal ended up falling through because we couldn't raise enough money for it. I mean, there were some other issues that we had with it, but that was the major one. When we backed out, we're like, we're just not going to be able to get this across the finish line. We weren't creative enough. I now know what I would have done differently. But I'm still glad that I didn't do the deal, because when you're calling something a ball and chain and when you have anxiety about doing it, that's not financial freedom. And I had to drastically pivot my business after that loss because we lost our earnest money. I basically took all the responsibility for that earnest money. We had to pay legal bills, financial due diligence. And so all the costs of looking into a deal of this size, I think it was 16 million, and we were doing like a $5.5, $6 million raise. It's expensive to go walk through 250 units with the property manager. You got to pay them to do that. And so we lost all that cash. And I just took some time to kind of cry, kind of think, kind of reevaluate. What did I learn from this? I ended up selling both of those Arkansas properties plus the high-rise development that we did in downtown Salt Lake that same year that we had that loss. And so that loss actually helped to offset how much taxes, capital gains I had to pay on the buildings that we sold. So financially, it ended up being fine. But emotionally, I really had to take a step back and say, if this goal is financial freedom and this goal is to be able to quit the W-2 and just have both of us working kind of part-time, managing our portfolio and maybe a passion project, then that's not what I was doing. That's not where I was going. I was building a big syndication business, and I was talking about having to hire an executive assistant. I was talking about having to, with that many units, bringing property management, asset management in-house and running these businesses. And I just had to say, that's not financial freedom. That is not why I started this out. It was to have passive income, spend more time with my family, and spend more time living in a more relaxed lifestyle. And it was exactly the opposite of the direction I was going. So I cut way back and I shifted over to just raising capital in an investing club model, where I just partner up with other entrepreneurs like me who are looking to, maybe they're looking to scale down like me, or maybe they're beginners looking to scale up. But we're both at the same place, regardless of which direction we're moving. We're both crossing over in that we can't raise $1 million or $2 million by ourselves. We can't go do a $30 million deal by ourselves, but we can group up and bring in maybe $1 million to somebody else's deal, and then use that pool to negotiate better terms, to negotiate a piece of the management. So that's the model that I switched over to. It's a lot less work. I have committees that we volunteer, underwriting committee, legal review committee, and everybody's contributing according to their own abilities, whether or not they have any experience in real estate or not. But we have fund managers in there. We have experienced operators who are using us to do filler deals. Maybe they only have 200 grand they need a place and they don't have a deal for it, so they'll jump in and do a deal with us. And so it's a crossroads of a lot of different people just looking to do deals in a smaller way, either because they're beginners or they need a filler, or because they're like me and wanting to scale back. So having that laser focus on that goal of why we're doing this in the first place, when you get off track, that goal will help to remind you and get you back on track. And it might be a pivot from where you're going, or it might just be a reminder that what you're doing is correct.
Wow, there is a lot in there. I think that's so important, because here's the problem with real estate and this whole financial freedom rabbit hole. People get so sucked into it, and, totally guilty of this myself, right? So yeah. I'm speaking from experience that you can get so sucked into it that literally everything else just becomes a blur, and you're so focused on this that you forget to just enjoy life. You forget, I'm doing this for my kids, but then I'm never home with my kids.
Yep.
Right? I'm doing this so I can have time freedom with my wife, but I'm working this Saturdays and nights and weekends. And, I think you can get sucked into that in any business, especially if you're entrepreneurial, you just have a high drive, you're committed. And those are all good things, but it can definitely go too far. And I applaud you for going through that hard process, growing in the moment. I'm sure it was very difficult. I'm sure it was very emotional as you grew through that. But at the end, you came out with more clarity, it seems like. And you created something that is still using that entrepreneurial spirit, your investment club. And at the end of the day, like, it's still serving your purposes. And the cool thing about money and investing in real estate is, like, it can absolutely be a full-time job. I know a lot of full-time investors, but they are full-time working. They just happen to be in real estate, right? Versus being a passive investor in a deal. Like, I'm in, I don't know if you know Andrew Cushman.
I know him. He doesn't know me.
I'm in one of his deals in Fort Walton Beach, Florida. It was a 252 unit apartment deal. I think I own like one of the door hinges on one of the apartments, right? Like, tiny slice. But I will say, like, I never have to think about tenants, toilets, paint colors.
Yep.
Countertops, like none of that. Like, I just receive a quarterly distribution, and it is the most passive income available.
Yeah.
Right. Like, it's literally like you own a stock and you just get a dividend. Like, you did nothing to earn that dividend other than bought a slice of the company. And that's what I love about it is, so often I think people like focus on, oh, well, you're doing this deal and you're taking so much equity, but it's a lot of work. Right. Like, I think the true winners are when someone can deploy money into an asset that they get tax benefits, which real estate gives you that, and they don't have to do anything. They're just getting checks in the mail or, an ACH. Like, that's the kind of money that allows you to go travel across the country, to go sit on a beach, only work 20 hours instead of 40 or 60 or 80 or whatever. Right? Like, that's the kind of money that we're all after anyways. And so I love that you finally, like, it clicked, like, hey, bigger isn't necessarily better, even though there's benefits of doing commercial real estate. But, maybe you want to switch your role a little bit so that you're leveraging what you're good at and you're able to do what you want, when you want, with who you want at a greater level. Because to a certain degree, you start a syndication business, like, that can be a rabbit hole where you have to bring on investor relations. You have to bring on an accountant. You have to bring on an executive assistant. And, like, it's a business. So maybe tell us just a little bit of a blurb on the investor club. And, if people are watching on YouTube or anything, you can see it on your background. It's called Highrise Capital Group, right?
Yeah. Highrise.group is the website. So you can get more information about the club there if you want to join. And I think the irony of the way that I'm doing it now is I'm doing kind of a hybrid between being a limited partner, because I do put cash into the deals, and also a general partner, because we use, like I said, that cash pool to go negotiate for a piece of the management to protect that investment. And the nice thing about it is I'm doing less work, and I only get to think about the parts that I like. I like paint colors. I like design. I like having a say on that. I also really like having helping out with the marketing on the front end, like I said, pitch decks and things like that. And the irony of that is we're doing bigger deals than we've ever done before. My biggest deals that I've ever done are through the club. We're doing institutional level deals, hundreds of units, tens of millions of dollars, and we're bringing in like $1 million for the project as a pool. And even though I love the analogy you just said, you own one door hinge. I would say on my 50 unit, I busted it out one time to see how many actual units, those 50, well, now it's 51 that we own. And I think I was like 5.5, something like that with my equity portion. And then I did a deal where I was the main sponsor, but I gave away most of the deal because I didn't want to run it. And I think I ended up owning like one unit it was like 120 units. And so for these institutional deals that I'm coming in from a club standpoint, I added it up one time. I think I own like 0.005% of the entire deal or something great, like a door hinge, right? Not even a whole unit, but we're not limited partners. We are non-managing members of the general partnership, where we are keeping an eye on things and we have more say. The owners, the sponsors, they know us. We call them, we talk, we sit in on the asset management meetings, we look at the documents. So for those who are looking to build credibility, it's a fantastic opportunity to get these things onto your resume. And it's a much lower barrier of entry, because you can get in there with maybe 50 grand of your own money, or zero of your own money and you go raise 100 grand for some friends. Our goal is 10 people per deal, bringing in about $1 million. And we're usually somewhere around 15. Some people just start out with very little amounts of money, much less than 50, because it's their very first time. They've never raised a dime. They've never invested in a deal like this before. So they're usually about 7 to 10 of us who are doing the heavy lifting, and then a few extras who really just want to participate in a joint venture and help out by putting cash into it and help out in the ways that they can with like admin kind of stuff, simple stuff where they're like, I don't know anything about commercial real estate, but I definitely can take on, and we're getting such a small portion of the equity. We're not needing to do a lot of the heavy lifting. So I think in that way, it's fantastic for me trying to scale back and then trying to scale up. And now I've got that stuff on my resume and portfolio too. And one of the things that have come out of this that I didn't really plan on, two things. One, I have like a gym buddy. We're going to look at deals together every week. When I have money to invest or I have investors who want to place capital, I have something to put it in because I'm out there doing the work, doing the heavy lifting to evaluate if I want to bring my capital, bring my investors' capital and spend my time helping manage these deals. I probably wouldn't be doing that if it was just me by myself, because I tend to procrastinate deal analysis because I don't really like it that much. So they force me to get out there and stay relevant. And one of the outcomes of that, other than just doing deals, is that people still see me active on social media. They still see me bringing them deals, and they still see me participating in our local RIA, and they'll bring me opportunities that I never would have had otherwise. Like, hey, can you come in and manage this part of my apartment deal that I'm not able to manage because we just don't have the right person on our team for that? And then I fit in there. And people are offering me to get involved with deals in very small ways where my particular skill set is useful, but I don't have to run the whole thing. And that was an unexpected benefit of being in the club. And I've noticed a lot of the club members have had the same, because they're saying, hey, look, I'm participating in these large deals, and they're building that same kind of network. People are reaching out to them to ask for help on things that they need. And so that's been a fantastic opportunity for me to stay active and relevant, and as well as the club members, whatever their need is, like I said, fund manager, operator, beginner, scaling back like me, semi-retired, we're all able to stay active and find what we want. I think being a limited partner is great. That's what I'm aiming for eventually, to just have a K1 business where my taxes at the end of the year are just all of our K1s. My husband's no longer has a W-2, and we're just submitting all of our K1s from all of our investments, and we just manage our personal portfolio. But until that happens, I do really like the accountability of looking at deals every week and working with a group of people and creating a network of people that I know and trust and want to work with. That's the most valuable thing you can have in this business.
Yeah. I mean, I've said it before on my podcast. And I mean, if you know me at all, more than the money, more than the deals, like this is relationships, real estate's relationships. And at the end of the day, it's all about who you're becoming as a person. And it's been awesome to watch your journey. Awesome to see you go through everything you've been through, just kind of, fly on the wall from social media, seeing you, commercial broker, loan broker that we both use, invited us to a jazz game. You got a suite, and we bumped into each other, and it's just cool, like the relationships and the symbiotic relationship that happens to us all. Mm-hmm. And it's really cool. So we'll wrap it up real quick with the last question. Knowing what you know now, you're 15 years into your journey, right? From starting in Austin, what would you have done differently on your journey?
Well, I heard a quote recently that has been kind of life-changing. It's really old. I think Lao Tzu is, the master accomplishes more and more by doing less and less until he accomplishes everything by doing nothing. And I think that if I had taken this into my mindset a lot earlier, that I could have recognized that I can contribute in the way that I can contribute, recognizing that, not feeling like I'm not enough, I don't have enough money, I don't have enough knowledge, I don't have enough network, and just saying I'm going to become a master at this and then do less and less until I'm basically doing nothing as a limited partner. And so I think one big thing I would have changed, especially back in Austin, when I was a photographer, I would have taken the cash that I made as a photographer, because this is my side hustle. My husband had a W-2. He still has a W-2. I would have taken that money and invested it in rental properties, even singles. We don't have to go crazy here with commercial stuff. I should have taken that storage developer up when he said, hey, can I help you develop a storage unit on your acreage? I should have said, I don't know what that looks like, but sure, let's do it. But I was too brainwashed thinking we had to do it all with cash, all with our own cash, that partnerships are no good, being scared of doing something bigger. I just would have taken people up like that. I know Robert Allen's nephew, and he offered to teach me how to invest in real estate. And show me around. He basically wanted to partner with me, his deals. And I looked at a couple and I felt uncomfortable. I just didn't know. He came and asked us for a hard money loan on all that money we saved up after 2008 and asked if he could borrow it and put it onto a house and we'd be his private money lender. And we said no, because we just didn't know what we were doing. And so we passed up on so many opportunities with people who were doing big things in Austin, and we just didn't do any of it. And especially since I moved away and I have been investing in real estate and being more vocal about it on social media, I have had old friends from Austin reach out to me who have been doing this the whole time I've known them, the whole 20 years, building high rises and strip malls and things. I'm like, I didn't even know what you did for a living. I just didn't even ask. I didn't know. And I'm embarrassed now. They're like, do you need some money for a deal? I'd love to partner with you. Salt Lake's a great market. I have this deal in Austin. Do you want to partner on it? I had no clue because I never really asked and I never really put it out there. So I would have taken that cash that I made as a photographer. I would have invested on it and I would have networked better with the people who were sitting right in front of me at the time. And I don't know why I didn't. I really don't know. I think the real estate clubs in Salt Lake are some of the best in the country. And we have more investors in Salt Lake probably per capita than most other cities in the country. And maybe that's what I needed to get started on this. I can't tell you why I didn't do it, but if I would go back and do it differently, it's take your active income, buy investments with it, and then live off of the cash flow from the investments. And just from doing that, you will be introduced to other people who are doing the same thing, and you will be respected for doing that thing because it's different. And you will be able to meet and network with people who are doing amazing things and be more open-minded to jumping in on things when the people are sitting right in front of you.
Awesome. Well, if there's one thing you guys take away from this, is just say yes. Say yes to opportunities. You never know where they're going to lead. It's been phenomenal having you on here, Emma. Thank you. I look forward to seeing what the future brings for you. If anyone is interested in finding out more about this investment club, again, it's highrise.group. We'll link to it in the show notes. Emma's doing some really cool things. It's cool that you can put this community together. Thanks for jumping on and having this great conversation with me. So with that, we'll see you later.
Appreciate it.
Thank you for joining me for another episode of the Financially Free Investor. If you found value in this episode or know someone who would find value in this information, please share with them, subscribe, and send us a review.